Good afternoon, everyone, and today we'll have another public analysis on commodities. During our very first public analysis, I explained the trade setups that I already look at. They're primarily for swing trades. So, for example, the one we see right now for gold, all the information that we see currently, so all the daily, weekly, and monthly levels, the order blocks, and the fair value gaps, are already explained at the first public analysis. So if you're curious why I made the trade setup like I did, you can check out the first public analysis where everything is explained. As of right now, what I'm doing is I monitor the prices of the commodities. So for example for gold, but also for the rest of the commodities that are found in this list. And then we'll look at some lower time frame trade possibilities, and also even to take the swing trade possibilities into account, but then more or less to determine at what prices, at what moments we would like to take a trade on that level. Alright, so first for gold we can check the lower time frame, because if we just look at the swing trade possibilities, one of the better possibilities for a long would be at the bullish order block, as explained earlier during the first analysis. But if we look at the price at where it currently is, we can see that the price is way higher than the bullish order block. In other words, it takes quite a while for price to even get here in the first place. However, if we look at the lower time frame, we see that a strong low was formed earlier, around 10 days ago. And the reason it's a strong low is simply because we see that at the hourly time frame we can see it clearly that price formed a lower high and lower low constantly. But after this low, a new higher high has formed instead of a lower high, and even that pullback is also a higher low. So in other words, this is a strong low, and this is an important low to keep in mind on a local level. And after this higher low, we even see that it continues, so higher highs and higher lows. One of the things I looked at earlier was the possibility for this range to continue. So if price went up here, we could have even had another possibility for a small trade to the upside. It didn't happen, and as of now, or at least as of yesterday, what I've seen, there weren't many good trading possibilities for gold on the lower time frame. And why do I say it like this? It's simply because I trade based on ranges most often. So the trades I look at, often there is a certain range that I take into account, and the simple reason for this is that my trading's edge are based around ranges. So in other words, my positive expected value trades, the highest ones, most often involve a certain range that I keep into mind. One of the things I looked at earlier was a certain range at the 1 hour time frame. And as we can see for the bottom, the reason I drew it like this is because price reacted around that level quite clearly at the 11th of May, at the 17th, and even at the 20th we see a certain reaction on that 1 hour level. And if we look at the upside, we also see it around these levels. This one, this can be seen as a deviation of that specific 1 hour range, and as of right now the price has not moved yet to that 1 hour level, but it's possible that there might be another reaction. So it would even be a possibility for a small short, given that the lower time frame supports that idea as well. I just want to check where this range was exactly drawn, the one with the black line. Okay, it's the bigger range. And the bigger, I mean the one that's based on the swing trade itself. Okay, so we can see that this is also the equilibrium of the range that we're looking for a swing trade. So it's the 0.5 line. I don't often regard this as an important line. It really depends on at what commodity I check and during what period. So if we just look at gold, for example, we see that 0.5 line, it did work sometimes. So this is especially one important reaction. This one as well, and these specific reactions. So it's really nitpicking, because there are also quite a lot of times that it didn't work at all. So for example, this one, even though it went to the downside, the deviation of it was quite large. And if you look at this part, it's also a very large deviation before it went to the downside. So in other words, it's not something I immediately look for to take into account for a possible trade opportunity. Sometimes for other prices, or for other commodities rather, it is a useful line. So it really depends on what range we look at and at how price reacted around that price level, around the equilibrium of a certain range. But for this one, it's not particularly one that I'm interested in. If we just summarize it for gold, for a trade on the lower time frame, one thing that might be interesting, with the emphasis on might, is a small short, given that the lower time frame supports it, and it would be specifically one where it would react on that 1 hour level, might even make a small deviation, just like this one. I can also draw it just to have it clear. This as a small deviation. If something is similar to that, then what we prefer to see is something like this. I can draw it. Will be that price makes a movement that looks like an uptrend, even makes a deviation, then it goes below this 1 hour level, makes a pullback, and then there's even a possibility for us to look at a small short, given that this all happens. If price looks to reverse even earlier before making a deviation, then it's also a possibility to perhaps look for a trade, given that there's also a small pullback possibility. But it's not something I would like to do immediately, so I will not place a limit order as of right now, simply because we need to look at how the price developments are on the lower time frame. For now, that's it for gold. Also the one small last thing we can say is a similar trade setup would be on the lower side of that 1 hour range, but it's less preferable for me, simply because below that there's a more important daily level. There's also a fair value gap that's yet to be filled, and therefore it's less desirable for me to look for a long, especially since on the lower time frame it's even clear that there seems to be a downtrend developing. So it's not a desired one. I do have an alert just in case it might be desired for whatever new input data we have on price, but it's the less desirable trade for me on the lower time frame for gold. Next, we can look at silver. Just like for gold and just like for a couple of other commodities, including platinum, we have a swing trade setup that's clearly defined and explained during the first public analysis. So I won't go over every single detail of this swing trade setup, but one of the things that's interesting is the fact that these equal lows are taken out here. And if we just look a little bit better, it does look like that silver moved back into the lower boundary, so just a little bit higher than the monthly level. And this was something that I was waiting for earlier. So yesterday in Dutch I explained that I wanted silver to make this movement before even considering to go long for a swing trade setup. And the reason for that is that it would be a confirmation that there is a range continuation. So the range that I'm looking at is particularly this range. And also one of the more important points would be the point of control, simply because there was the most volume during this complete range development. But if I just go at the lower time frame, something I want to see for silver for a swing setup is that there is a movement to the upside, a pullback on the monthly level, and then it's interesting, especially if a lower time frame supports it, that will make a continuation to the upside, and that's the moment that we can be interested for a swing long trade. On the lower time frame, I even made another range for silver. Yesterday in the Dutch group I explained it as well. I put an alert just in case that silver would move again into the lower range of the or the lower boundary rather of this small range, and ideally what we would wanted to see was a continuation of the range and even a breakout, so that we're even a bit more early in the swing trade setup, which is just a nice bonus. This didn't happen, the alert didn't went off, and we did not went to the lower part of the range, unfortunately. So this is a trade setup that didn't went in. Still, it's also a good thing if we see that there is a more convincing reclaim of the price levels above the monthly level, and if there is a pullback afterwards, we still have a nice opportunity for a swing trade long. But you just have to be patient for this specific price development. The next commodity to check out is copper. I looked at it earlier from a higher time frame, but there was a less convincing range to look at. So if we look at the lower side, or the lower side of this so-called range, then we do see a bullish order block properly defined, and we even see that the price tapped into it a couple of times. So this is 1 time, 2, 3, and even 4 times until now, and this is a bullish order block that developed 1 year ago, and we do see that the price reacts on it quite well. And for a swing trade setup, one of the things I would want to see for an entry is simply the price to move back into this volume, or rather the order block I mean, and for price to react out of it quite quickly. So even on the daily time frame, we see that the weekly order block moved in quite quickly. So here it took 2 days, this only 1 day, this 2 days again, and this also 2 days. So it's a highly reactive order block, which is ideal for us to take into regard before taking any swing trade long. If we look at a potential take profit, given that we enter around this, or in this order block rather, then it's a bit harder because it's not a properly defined range, or there is no properly defined range rather. One of the things that I do keep into account is the way price moves on the lower time frame in that case, and potentially the point of control is one place to have the first take profit. And if price completely accepts and reclaims this value area, it would be even possible to move towards the value area high, at which this fair value gap will also be filled in. After that, it's not something we can say right now. Given that this all might happen, then we can even look further and look at these levels, so these two fair value gaps, this high volume node where a lot of selling might take place again, and even a price reaction on this daily level. But this is really something that might happen, but it takes quite a lot of time before it develops as such. As for now, for the swing trade, I'll simply wait until price moves back into this. If price moves immediately way higher from this point, then I'll miss that long trade setup for a swing. But we can also check the lower time frame. And what's interesting to see is that we see a double V bottom. So simply that price moved pullback and then it moved in an uptrend higher and higher. And especially what I do find interesting is that after this movement, price made a higher high compared to these two local highs, and the pullback was not lower than this low. So in other words, price did look like it moves higher and higher. But for me, there is no specific range to see. One of the things that we can see is a phantom trend line. I don't trade trend lines at all, but I do take them into account, especially since liquidity tends to be put below these trend lines. So it's kind of the opposite way. It's not that I have confidence that price bounces on the trend line every time it's around that price level, but what I am confident in is that price will break through it once, take a liquidity grab, and move even further on the upside, or it even goes more to the downside and it keeps going down. But those movements are something that I am more interested in, and not so much the bounces off the trend line. For me, it's simply about where is the liquidity and where do market makers want to go with price. That's the thing I am always thinking about. But as of now, for a range on copper on the lower time frame, it's not clear. There are clear price levels at where price reacted. So this one, for example, and you can say even this part, but not a range for me to trade. So in other words, there is no lower time frame trade that I'm interested in for copper. Next one is corn, or corn futures to be more exact. And if I'm looking at a swing trade, one of the things I do find interesting is not a real range, but the reason I do find it interesting is from a macroeconomic perspective, that the Russia-Ukraine conflict supports a lot of these commodities, including corn, for certain long opportunities, as you can see. And one of the things I'm looking at is at a pullback towards this weekly level. As you can see, price stayed at this weekly level for quite a lot of time, a bit more than a full month. And if price moves back into this, then it's a place that I would like to look for a swing trade long. Okay, it is interesting that there is not that many volume around these levels. So you can even say that the weekly level is a bit lower than the value area low. Also for me a good point, that given that I want to take a swing trade, because that means that price doesn't really want to move below this. Maybe for a liquidity grab it does, but afterwards there is a good chance that we can go higher if this pullback is made to this weekly level. For the rest, if we look at the higher time frame, there is no other trade in particular that I'm looking at, except for taking a possible long at around this price. One might potentially look at a short around this daily level, but it's less desired for me simply because of the whole macroeconomic standpoint. So let's say price comes around this level and there is more news regarding a further negative development of the whole conflict, then corn might even go higher and higher. So it's not something that I'm really looking forward to. Of course, the conflict itself, but also not something for the swing trade for taking a short around these levels. If we just look at the lower time frame for corn, I did look at a few ranges. So as I've explained earlier, I took a short trade despite the whole macroeconomic conflict, simply because I saw that this short range could have had a small stop loss. It looks like a pretty strong negative or extreme volume imbalance for the fair value gap, which would be a negative thing. But on the lower time frame, I did saw that price tend to move downwards, and after taking this trade, it was a nice one because price simply broke this range even, and it was something that's lovely to monitor, because what we could do is we can simply monitor price on a lower time frame, put trading stops constantly, and when price tends to make a huge pullback, then it's the moment that the trailing stop loss goes in. Something that happened well, and it was the next range that I looked at was this one, particularly with a bullish order block in mind. We can see that price reacted on it quite well, didn't move quickly away from the bullish order block, but it did work as a support. And as of right now, we see that price is above this daily level. As we can see, the price of corn, it broke out of this range, and a possibility is that it's simply a deviation of the range, so that price moves like in a form of a liquidity grab. It goes back under the daily level, back into the range, and then continues that range altogether. This is a possibility. Personally, I will not place an alert for it, simply because I don't have the time today to monitor that trade in this specific opportunity. But it's something good to keep in mind in case you do have the time and patience to have this all regarded. And lastly, another thing on the lower time frame we can see is that if price tends to make a pullback, have the daily level as a support, so it would be a support resistance flip, then price can even come back into this range and continue as such. Also a possibility to take into account. So what would be important is, given that the price would make a pullback here, that it's important to see how price reacts around this daily level before deciding for a long or short bias. For me, both wouldn't be able to. I wouldn't be able to profit from both due to the lack of time. But for yourself, it's good to have this all into account if you want to take a long time frame or lower time frame trade on corn. For wheat, it's more similar on the higher time frame. We can see that there is a huge uptrend, was due to the Russia-Ukraine conflict, but after this uptrend we see a so-called range, so at least the upper boundary of the range is visible. The lower one is not that clear yet. We see that price reacted around this weekly level, but it could also even be a deviation of this daily level, since price moved around this for quite a long time. In other words, it's not as clear as where to check for a swing trade long. One of the alerts I placed is at around this daily level, just a bit above, just to see how price reacts around the level. So dependent on the lower time frame in that particular circumstance, we can look for a swing trade long, or we can even wait until price bounces on this weekly level. It's something we have to look at when price is around these levels. On the lower time frame, I looked at this specific range. Again, I do not have the time today to take a specific lower time frame trade, but it is a range that you can profit from, given that price moves again in that specific way. So we see last time that price hit the upper boundary, it went back to the middle of the range, and it's good for a possibility to go for a short, especially since you can place a small stop loss above the boundary. but not something I will do. Also, if we just look at if we take the macroeconomic perspective into account, I am more in favor of taking a long trade. So I do have an alert here, maybe perhaps for next week when price moves back into the range. Then I might look for a long at this specific position. It's not the most favorable place, also because the point of control is here. So it's not a trade I look forward to take, but it's still a good one to have in check, just to check how price moves around this level when it moves back into this specific price level. For oil, after the huge uptrend, price tends to move into a range. I explained a bit more about this in the first public analysis, but one of the things is the bullish order block that I have in mind. The bullish order block would be particularly interesting for a swing trade long. We see that price reacted quite well on this 12-hour bullish order block. Here it just did not tap, I think, but regardless, I think the order block is still valid. And there is a potential possibility for a short, but I'm more looking forward to a possible short after this volume imbalance is filled in. So as you can see, also on the 12-hour there's a volume imbalance, and therefore price is more likely to fill in that part of the fair value gap. Still, it's not a desirable trade on macroeconomic level. Also pretty harsh to have a stop loss into account, especially since this deviation was quite large. So it might even be possible that we have another large deviation and going back into the range. It's something that we just need to keep track of, but it's good to have an alert here just to see how price moves when we are into that price level. And lastly, just for a lower time frame opportunity, if price moves back with conviction into the range, we can even see a possibility of a small short trade, and then going back into this for value or fair value gap on the 4-hour time frame, and perhaps even lower to this point of control and this fair value gap. But it really depends on how the price moves, for that matter. I am more in favor of taking a short at this level, if anything, but especially the long trade opportunity is something that I'm looking forward to. So if price moves back into the bullish order block, and also if the Russia-Ukraine conflict is still not solved, then it's interesting to check for a long at around these price levels for oil. For Brent oil, I have not charted anything. I did it deliberately because West Texas oil is hugely correlated, of course, since both are oil commodities, and therefore it's not desirable for me to look at Brent, simply because the small differences in correlation is just not worth it for me to take this into account as well. For natural gas, we see a huge uptrend as well, and the thing is that there is no range at all on the higher time frame. So one of the possible things that I can do is look at the lower time frame and possibly, or at least more conveniently, look for a long opportunity. So when price makes a pullback into a range, that we can look for a long. I believe yesterday during the Dutch analysis, I'm not sure anymore, but I believe I pointed out these equal highs. Well, these equal highs are taken, of course, as you can see, but these equal highs are formed now. And one of the possibilities might be to have a liquidity grab around here for these equal lows in particular, look for a long possibility, and write out the range even to the liquidity grab above the equal highs. This is something would be a great trade possibility. So roughly speaking, if we even enter around the range, then it could be a great trade possibility. But it's something that natural gas simply has to develop in price before we can even take any trade into account. But these are more or less the things I want to see for natural gas. Okay, I don't have an alert or any place for an alert yet. I will place another alert here just so we can see when if price goes back to these lows, whether it would have a liquidity grab. I do think it's likely, simply because probably a lot of traders and other parties within the market have placed certain stop losses around these levels. So I do think a liquidity grab would be possible. But still, if we place an alert here, then we can see how price tends to develop on the lower time frame. I'll do this after the recording. Okay, this fair value gap has already been filled in. I placed it earlier before this whole liquidity grab took place. And now the new fair value gaps that are formed can be marked out. Okay, I believe that's it for natural gas. I am looking forward to take a trade around these levels, especially with the huge reward possibility as I just shown. It would be a nice trade to take. And the fair value gaps below here, they're unlikely to get filled in, simply because it's in such a strong uptrend that price needs to take a really long time, and the whole Ukraine conflict needs to be changed before natural gas possibly go below and fill in those fair value gaps. So it's not really something I'm looking forward to anymore. Alright, now for platinum. The whole swing trade setup is explained earlier in the other public analysis, but if we look at the lower time frame, I'm in particular looking for a long trade, a swing trade long on the weekly level. We see that price reacted on the weekly level quite well. I didn't have time back then, so I couldn't take the trade, unfortunately. But if price moves back into this weekly level, it would be something interesting to take a trade into. And in that case, I'll most likely have a small stop loss, and I can explain why. If we just zoom out, we see that platinum has relatively small deviations, especially if we compare it to palladium. And what I've explained earlier is that the range is quite similar and the correlation is quite high for these two commodities. And because platinum has a smaller deviation on the downside and even on the upside as well, platinum is more trustworthy to trade, so to say, which is why I tend to take a swing trade long on this commodity and not on palladium. But if we see for platinum what happens, and what's more in general, is if a range continues, then we do see deviations, we do see liquidity grabs, but after that price tends to move again and continues within the range. So in other words, it's unlikely for a range continuation to see this again, something like this as a deviation. Which is also why I won't use a huge stop loss, even though there's a daily level, or a weekly level rather, as well. So this weekly level, to be more precise, it's not something I would like to take into account for the stop loss, because if price tends to move like this, then it's for me less likely to see a range continuation on a technical level at least, and it would be just as a different trade for me to take. So it would be even a specific bounce that I would like to see on the weekly level. But as for now, I think that a small deviation would be more likely, simply because price already had a liquidity grab around these levels. So last month this happened, and if by chance price moves under the range, I don't expect a huge liquidity grab anymore. Which is why I do take this daily level into account for the stop loss, but not much more than that. Also recently we see that the price reacted on this 2-hour level quite often. So if price tends to reverse again, we can go for a take profit already if price enters my long trade. But more favorably, we would like to have take profits on a higher levels. So particularly on either of these point of controls, perhaps both, and more favorably, of course, the upper range or the upper boundary of the range. This is something that price needs to develop, so we'll see within time. But for now, I'm waiting for this long trade opportunity. Also, what's good for me to say again is that Trias Traders is not a signal group whatsoever. So if this opportunity presents itself, I will not say buy platinum at X price or set stop loss at Y price. It's not a signal group. It's something that we have made as a community to make you a better trader. So both for novice and for experienced traders, both kind of traders will see huge value within the community, but it's simply a thing that lets you develop to become a better trader. So it's not in any way, shape or form a signal group. And also all the information we give is no financial advice. It's just educational and entertainment, even if you enjoy watching the videos. Also, if you enjoy watching the videos, press the like and subscribe button so we can move further as a community and reach out other YouTubers and traders as well. There was the lower time frame analysis on platinum. And for palladium, it's not something that I'm looking into, simply what I explained. Correlation with platinum is quite large, and platinum has more desirable traits, so the smaller deviations, which is why I won't look at palladium for now. Soybean had a huge uptrend on the higher time frame, and the range I'm looking at is something that's a bit more visible on the 4-hour, I believe. This is this range. It's this weekly level and this, I guess I can see, daily level. So between these two boundaries there is a specific range, and what's interesting now is that price is around this daily level and the equal highs are formed earlier. So what I expect is a liquidity grab above it, just because price tends to have quite some liquidity above those highs. This is something that we need to see monitored and developed out. Okay, this fair value gap's already been visited. For now, not much else is there to do. We could potentially look for a short trade if the liquidity grab has already took place. So let's say that the liquidity grab went around this, went eventually back into this range, so would have a pullback around the daily level. That's the moment where we could look for a short. Less desirable because of the whole macroeconomic situation, but still a trade possibility. And more favorable would be even if price ranges like this and would present itself a long opportunity. This is something that's way more favorable for us traders to do. But it's simply those two things are the ones I'm looking at for soybean. And if you would even look at a really lower time frame at 5 minutes, there is a small range, so this one in particular, that you can look at. Here you can see liquidity grab already taking place, and there might be a possibility that price has a small liquidity grab here, and this is a possibility where you can take a long until this, or even when when the range breaks out and has the larger liquidity grab. It's something that might be interesting. I have no time for it today to do it myself, but if you guys have the time, it's still a good thing to look forward to. So you can even place an alert right here for this, and then you need to monitor the lower time frame to take that decision. Alright, for cotton cash, I have checked a bit more and I saw that another cotton contract to trade has way lower spreads. So this is the last time I will check cotton cash. I will check cotton number 2 in the future. But since I charted this earlier and I did not chart this yet, I will just give you guys an insight on cotton cash for the last time. So there's a pretty large uptrend as well, and what we do see is that there are a few important levels at which price tend to react. And during the Dutch analysis yesterday, I told that I noticed a strong low because price made higher highs or lower highs and lower lows, and at the strong low it broke out in the sense that it made a higher high and even a higher low afterwards. So during the Dutch analysis, price was exactly here, and I took a trade slightly below that because that's when the market opened for me to take a trade. And what I did is I saw that price moved quite harshly and I didn't want to reclaim the daily level again. So when this move happened, as you can see, this particular move, I went out of the trade. So because of the spread, I believe I have a small minor loss. It's almost nothing, but the idea was for me more or less, I wanted to see here that price moves back into the daily level and then moves above. Didn't happen. Price did move back here for me to have the possibility to go for going out of the trade. Summarize, the possibility for the trade it doesn't exist anymore. We got out with a small chalk, so it's all good. And for cotton cash, there is no other trade that I'm looking at right now. And also what I've said, this is the last time I will even look at cotton cash due to the high spreads. If you look at this particular cotton CFD, there's a more convenient spread, but I have not charted this one yet, so I will do this a bit later on. It looks really similar to cotton cash, of course, since it's the same commodity that we're looking at. Also a high uptrend, but the interesting thing is that what we can see is there are different price levels on where to look. For example, this daily level is not as visible here because these two highs are not at the same level at all. while here they're really close. So that's one daily level that doesn't even exist on this particular commodity chart. I will also research which ones is more leading for cotton itself. So the more leading one is the one I will trade. So let's say that this one is more leading cotton cash, then I will trade it again, even though the spread is pretty high. And the reason for that is I want to have the highest probability that price tends to react indeed at the places where I think it will react. It's something that I will keep you guys updated on, so then you'll see which of the two CFDs I will trade in the future. But for now it's either one of them. It's definitely not both. And it's definitely something that I need to chart if this one is the more favorable CFD to trade. If we look at sugar, huge uptrend on the higher time frame, and there is a range for me to look at, and it was formed during the end of last year until now. For me, it's more or less the question. You can say it is a range. The upper boundary is pretty clear. The lower boundary is not as clear though. The reason for it is that during this particular time, we see that price it does react on the daily level, but for a long trade, it's more or less the question whether to take the trade during this daily level or the daily level below it. I did place an alert so we can monitor how price moves around this level if price comes back into it. There is no other place for me to check for a long if we look at the higher time frame. And even on the lower, the only place you could go for a long is if you think that this is the proper support resistance flip, which is also the point of control. It could be it's not something that I will trade at all, but if you're interested, you can see this as a place for a support resistance flip. Lastly, for the upper daily level, so the one that has acted as a resistance right now, there is a possibility to go for a short. It's less desirable due to the macroeconomic stance, but it's still, from a technical perspective, not crazy to go for a short. Do keep in mind that there could be a large liquidity grab, especially if this daily level is considered as such by the other greater parties as well. It will probably be a liquidity grab, and afterwards it could potentially go lower. I've placed an alert as well, so also to keep it in mind when price comes back into this daily level. As of now, nothing yet to go into. So summarized, either we go for a long around this level or this one, depends on how price moves, and we might go for a short if price tends to have a small liquidity grab, or even none at all. We can go for a short around this price level. That's it for sugar. And lastly, we can look at cacao. I will not trade aluminium or orange juice at the time, and the reason for that is simply because the ranges are not clearly defined. There is a pretty large uptrend, and for aluminium it's even less clear because the pullback is huge from the last month. But for now, there are no desirable trade opportunities, which is the reason why I won't trade these two commodities for the time being. Maybe in the future, but not for now. So the last one I'll look at is cacao. And with cacao, if we look at the higher time frame, on the weekly it's a bit better to have it visualized. We see that there is a bullish order block, which is the more desirable one to go for a long. You can see that price reacted to it quite well. It moved away quite quickly, and here, even though there's a liquidity grab, it did move away nicely. Here's quick reactions, which is optimal for the order block to have it validated. And if we look at the bearish order block, we see that there's a clear one as well. So the resistance is clear, and this is also in line with the monthly level even. So potentially for a long, this would be a great moment to have a take profit. if we look at the way the cacao has moved in a specific smaller range, we do see another bullish order block as well. This is more on the daily, and we see that price does react on it, even though here it's a bit slower, but before it reacted on it quite well. The reason I did not take a trade, even though there's a strong low, is because there's a fair value gap below this whole trade. And there's even a volume imbalance, so a more extreme one, so to say. And what I would like to see is price to go back into this fair value gap, and then there's a potential that we can check for a long. Even though there's a day level here, there around these levels, it's the time to monitor on the lower time frame to see a reversal on the upside. One might argue that because of the strong low, it could be a good opportunity to go for long at the pullback. So in that case, you'll simply disregard this fair value gap, and you'll say that price moves to the upside. It's probably not something that I will do, but if you are more an aggressive trader, it's just possible to take this trade as well, this trade opportunity as well. So if I just visualize it, then it would be a pullback, and afterwards you want to see higher highs and higher lows, simply because this strong low has formed. And with this in mind, price could move higher and higher. Again, not something that I will do, but it's good to keep in mind. This is the whole analysis for today. I hope you guys enjoyed it and learned from the analysis. Have a nice weekend. Like, subscribe, and I will see you guys in the next video.